How are you reading things so far in the last few days?
Yeah, Mike, I kind of go back to the conversation you just had with Steve with regard to, I think the general playbook has been to say, listen, markets don't behave that poorly after the first Fed rate hike. It's two steps and a stumble, that type of thing. The problem is that you haven't seen negative real yields on the Fed funds rate of this magnitude really since 1974. 1975. So what worries me the most, I have to say, is the Fed, I believe, is really behind the curve, much more behind the curve than they've been probably in 40 years. And so I feel very strongly, we felt very strongly last year that you want to be in the more value-oriented sectors like financials, energy, materials. That was kind of a standard view of ours last year. Last year, both growth and value did pretty well. You weren't hurt too poorly, too much by kind of making that call. I think this year, though, you're going to see more of what we've seen in the last couple of days, where people are going to have to make a choice. They're going to have to decide whether they want to be more value-oriented or more growth-oriented. And as you know, I tend to feel like you want to be more value-oriented in this environment.
I mean, Fed officials, some number of them deliberating at the December meeting, also implicitly felt as if the Fed might perhaps either be behind the curve or maybe find itself there coming into this year, if they're talking about, at the outside of fourth rate hike and then, maybe trimming back on the balance sheet as well. But it also has been the case that you've often got this kind of, good cop, bad cop thing going with the Fed. They make some hawkish noises. They set the market up to say, hey, be on alert for what might happen. And then we'll see how inflation plays out, and we'll see how the data track, and we'll see how markets absorb that. So I guess we can't really write the script just yet until we see how inflation acts in the next few months.
Well, Mike, I think that's right. And I think it's also right. Both people that you and I both know that have been on the FOMC, I'm always reminded that it's not a democratic institution, that a lot of times these men and women communicate to each other through the press. And there's really only one person ultimately that makes the choice, and that's the chairman. And so Powell, I think it's very interesting. This is an election year. I don't think inflation and the Fed have really been on the ballot probably for 40 years. And I think you are vectoring towards a period of time later this year where it's very much going to be a political issue. We don't tend to think of the Fed as a political institution. And I think it's gotten itself into a point now where it almost might not have a choice.